Thank you for joining us at XM.com for today's market comment by Rafi Boyajian. I'm Maria Pachurdes. Bond yields slipped on Friday as higher for longer bets took a step back on the last trading day of the quarter ahead of some key inflation and consumer spending data out of the United States. Hawkish Fed talk, backed up by solid U.S. economic indicators, added fresh impetus to the rally in Treasury yields last week. The U.S. 10-year yield brushed a 16-year high on Thursday before reversing lower as investors took some comfort from remarks overnight by Richmond Fed President Thomas Barkin, who sounded less certain than some of his colleagues in recent days about the need for further tightening. With the Fed being more open to the idea that it may just be possible to cool the economy without pushing up unemployment, a soft set of PCE inflation numbers today could spark a further retreat in yields. The U.S. dollar came under pressure yesterday as Treasury yields fell back, and it's widening its losses today, providing some much-needed relief to its rivals. The euro may have received a boost from a surge in Eurozone government bond yields on Thursday after a spike in Italian yields. Moreover, inflation in the euro area fell more than expected in September, according to the flash estimate out today. The yen underperformed somewhat, however, on Friday, as earlier gains were trimmed after the Bank of Japan stepped in the bond market to limit the recent rapid rise in JGB yields. The dollar was last trading around 148.90 yen, remaining well within the intervention zone. Japan's finance minister repeated on Friday that officials are watching FX volatility closely. Adding to the yen's woes was a softer than expected print in the Tokyo core CPI rate. Equities also perked up on Friday, although Asia had a mixed session as Japanese shares failed to join in the rebound, while Chinese markers were shut for the long Golden Week holiday. Lower yields were enough to buoy Wall Street, posting solid gains on Thursday. Shares were lifted by strong performance in some big tech names, such as Meta and Nvidia. But despite the dip buying in tech stocks, Wall Street is on track for its worst quarter in a year. Thanks for watching today's market comment here at XM.com.